Hello guys, welcome to our channel. First of all, like my video and subscribe my channel for more informative videos about investments, about your business. So first of all, today our topics: the best investments to build wealth during a recession. So it's very easy and simple. When uncertainty loops on the economic horizon, investors buy the future-proof their portfolio, and these investors that can stand the test of time. A recession investment strategy can help shoot your portfolio from a massive hit, but fortunately, no foolproof solution exists. No investment will be guaranteed win, especially during a recession. However, some are more stable and allow you to come out the other side better off than before. So where should you allocate your resources, and what is the best investments during a recession? These 7 investments can help protect your portfolio and financial resources are best you go. So can you? First, get into the right mindset. Before we get into the specific of investments you can make in the tumultuous and economic times, you need the right mindsets of your strategy to be effective. Remember to always stick to the fundamentals of investing, such as asset allocating and diversification. So it's not a cool you and dudes and not a rich quick scheme, but such as asset allocating, the diversification if you have the investment and advisors learn on the expertise to help you avoid hazard decisions. And one of the most important investments you can make is in yourself and your emotional or mental stability. So despite fear and uncertainty, if you are worried about how your portfolio will do, take this time to learn and prepare to remain emotionally stable, impulsive, self-off. So based on fear could portfolio and make it difficult to recover. So finally, don't try to predict market timing. It shares many symmetries and similarities is gaming in facts and while within sometimes it's not a safe and reliable way to grow your wealth. So US Treasury bond. So the first possible recession investment strategy, US Treasury bonds and bonds. These bonds are backed by the federal government, which has historically acted as a safe haven when equity market fall. This can give peace of mind and stable a diversification portfolio. One tip is to balance. You make too short and long the maturities to manage interest rates and sensitivity, and you can say it's the duration risk. So dividend-paying stock market will a downward trend make people hold more likely to their income, and dividend-paying stock can be a great option because they yield routine payments when the company performs well. If you make a smart choice to invest in companies with a track record of routine dividends in all markets, so they can deliver income even if share prices and under pressure. That said, in certain downturn, dividends may be reduced. Suspended focus on firms with low payouts ratio, strong cash flow and healthy balance sheets. Before making any investments, review the historical consistencies of dividends payments over multiple market cycles. Number 3, stock. Stock in the general can be a strategic option in a recession. Investors can scope up share at lower valuation, knowing that boom and bust cycles are natural for the economy. Our tip here is that diversify across market capitalization. Large cap stocks tend to be less sensitivity to market volatility, and while a small cap stock can rebound strongly during economic recovery. So they are in advantage to both in diverse portfolios. Simply buying the dip can the backfire if a company's fundamentals and the retracting. And next we have number 4, corporate bonds. And corporate bonds or investors case bonds can be and other less risky options for recession. So these loans of companies yields predetermined interest payments often higher than the treasury, and can project capital within your portfolio. So corporate bonds and they create a steady income streams with yield, and your bond may be selling at a premium, but of course the opposite is true as well. So number 5, gold and commodities. So gold might be answer if you want investors that has stood the test of the regarding market volatility, and your wild gold and the outperformed during sharp equality decline if may lack an early prices and your work. And as with anything, moderation and the diversification are key. While gold can outperform during sharp equality declines, it may recover, and if there are currently recovery phases. So ETFs and manual funds not sure want to keep in and picking the stock that might about the staples and utilities. They are often called your work, and if it is because they lend the outputs and follow healthcare and consumer staples and your utilities. They are often called the defenses sector. Has the ETFs because they lend it, and your work is it's like the mutual funds. It goes back to the age-old best practice of investing diversification. For example, you could invest in the ETFs that follow healthcare, consumer staples of utilities. These are often called the defensive sectors ETFs because they lend to outperform other areas in a market downfalls. Most people must continue to purchase items in these categories like toothpaste and cereal, so they can help balance risk and returns. So next we have number 7, cash and cash equivalent. And our portfolio should maintains some small amounts of cash and cash equivalent such as the money market funds and the treasury bill certified to or deposit and high yield saving accounts. And you will want to have some liquidity funds and purchases that will hold steady and without the risk of the market volatility. For example, you do not want to be forced to dip into your investments with your car breaks down during a recession. Wise investors now, they should keep 3 to 6 months worth to expenses in cash or cash equivalent of at any given time, recession or not. You might need more money than you think to weather the downturn, and selling off investments and dipping into your portfolio to cover living expenses is the typically ill advice. You can do more harm than good when you have to sell depressed prices. And another reasons to keep some liquid cash around is for any opportunities that might pop up. So remember, when the price of oil went negative and talk about an opportunity. So expert advice to help you keep a clear head. So are you ready to start thinking about your recession investment strategies? While the investing listed has a great starting point, so there are not cookie cutter answer to how to invest in any market, but maybe especially during tough economic time, you need to savvy now to reap all the benefits later, and McGillian can help you make wiser decisions about your investment strategy with comprehensive states, financial, legal, and tax planning with an emphasis on the charitable giving strategies. To book your consultant and see if our services are a fit for you. So, for comprehensive reviews of your personal situation, and always consult with a tax of or legal advisors, whether criteria advisor, network, LLC, or any of its representative may give legal to tax advisors. This material is provided by Kevin Mayer, was written by Axel Ace, non-affiliate of Magellan Planning Group, and it's the Satra Advisor Network. The return and the principal value of the bonds and the fluctuate with change in market conditions. So I hope you understand. Thanks for watching this video. Like my video and subscribe my channel for more informative videos. Goodbye.